Today is a big day. I decided to wear the red shirt. Vanguard announced the largest fee cut in Vanguard history. I was honestly starting to wonder what they're doing over there. It feels like it's been years since they made any significant fee reductions. Several years ago, there were fee wars between various investment companies, Vanguard, Fidelity, iShares, Schwab, and it seemed like it had really died down. Today, seemingly out of nowhere, Vanguard launched the next move and made the biggest cuts ever. I'll start by highlighting a few funds that are more popular with index investors and how much their fees went down. Afterwards, I'll show how even though these fee reductions seem small, it could save you hundreds of dollars per year. If that's not worth smashing the like button, I don't know what is. Before we get started, I'm Nick. Welcome. I create free financial content to help you. All I ask for in return is that you smash the like button to support free financial education. Here's the announcement from Vanguard dated this morning. Now, notice they say value of ownership. The concept here is Vanguard is actually owned by the people who invest in its index funds. So that means they should be doing everything they can to lower the fees for their owners, and they have a long history of doing that. This is the largest fee cut in their history, effective February 1st, 2025, with fee reductions across 87 funds, which is expected to save investors more than $350 million this year alone. If you scroll down, you can see some of the largest funds that this impacts. And then there's the full fund table down below. I created this spreadsheet just to show the comparison for some of the most popular funds I think you might be interested in. The total bond market index fund by 0.01%. This seems like a low amount because we're talking about 1/100th of 1% or 1 basis point. However, for $10,000, that equates to $1 per year in annual fees. So your fund, you were paying for this fund $5 per year in annual fees for every $10,000 invested. Now that's going to be lowered by 20% from $5 to $4. Doesn't seem like a lot, but we'll look at in a minute how that can really add up. So the total international bond index also saw 1 basis point fee, 9% reduction. Then there's a couple, the intermediate treasury index fund, the fund and ETF are both seeing a decent reduction. The treasury money market fund, this is one of the better money market funds out there. If you just want to store some cash for short-term needs, like your emergency fund, they actually lowered the fees on that by 22%, which is a pretty good deal. The tax-exempt bond ETF saw the biggest reduction of the ones on this list of 40%. And then the municipal money market fund, if you're looking for that tax-exempt money market, that was a pretty big reduction by 4 basis points. Now the big hitters, in my opinion, especially for my audience, are these total international stock index funds and then the total world stock index funds. They both saw reductions. So for the international stock index fund, a 3 basis point reduction, 25% from 0.12 to 0.09%. And then the ETF version from 0.08% down to 0.05%. It's a major reduction of 38%. Then the total world stock index fund, the mutual fund version, saw 1 basis point reduction, and so did the ETF VT from 0.07% down to 0.06%, 14% reduction. Again, while these may seem small, let's take a quick look at the accumulator tab. So this is simulating someone who's accumulating assets. So maybe they have $50,000 invested in VT, they're adding $20,000 per year. If we have a 10% estimated return, after 10 years, this 1 basis point reduction in fees alone would save them $269.59. Now, if we project out to 20, 30, or even 40 years, at 40 years, the total savings would add up to $31,663.83. It's a major amount of savings, actually, if you look at it compounding over time. Again, this is why we're index fund investors to begin with, is because of these low fees. It's even more drastic when you compare it to funds with 1% or 0.5% expense ratios. But imagine what it is when this is the difference, just 1 basis point, 0.01%. Now for a retired person, say they have $1 million invested in VT and they're pulling out $40,000 per year and they're expecting a 10% return. Over the first 10 years, this is going to save them $2,000 in fees. That's a major difference. I would be very happy about that. And say they somehow manage to live for 40 years because they're an early retiree, that could be worth over $100,000 in lower fees, $113,583 in lower fees over 40 years for an early retiree. Now, I realize it may seem a little ridiculous to get excited about a fee reduction of 1 basis point or 0.01%, but this is a big deal for long-term buy and hold index investors. We're literally seeing the fees we're paying to Vanguard cut by 10, possibly up towards 40% overnight. This is amazing. Can mean tens of thousands, if not hundreds of thousands of dollars for some people over the long term. Now, I don't know how much fees can go lower, but let's hope we see more of these price wars and fee reductions across the industry. I don't see why we shouldn't aim for 0. Thanks for watching, everyone. Let me know how you feel about these fee reductions in the comments below. If you got value from the video, make sure to smash the like button and subscribe. Later.